But how does AI help augment human capability rather than replacing humans?
Sure. I guess that's aimed at me because the company I work for is big in AI, and really we're at a stage now where you got to think about what we like to call augmented intelligence, where it augments your human capability. We're not really thinking in terms of the computer making all of the decisions for you, but we're thinking about how a thinking cognitive system can allow you to review thousands of reports, look at huge amounts of documentation that you couldn't now. We're sort of in this information boom where basically we're all overwhelmed with the amount of things that we have to read every day. Well, same thing with your portfolio and looking at your investment. You can't possibly look at all those reports. So what we think now is in terms of augmenting, using the machine to augment what you are capable of doing and enhance what you're capable of doing. And that goes into the robo-advising space too, where AI can be part of the solution to, well, okay, you pick portfolios by basic analytics. Okay, that's tried and true for many, many years. But now we can use AI to actually help be an input into that analytical decision process to give your system a way of looking at the data, the reports, and the written data that's out there, and make that part of the decision process.
I also think that in areas like sort of profiling of clients and risk profiling, the AI opportunity is huge in terms of the analysis. Here in the current approach to profiling, it's a few very basic questions, and from that you get put into a bucket. And I think with the AI opportunity and big data opportunity, you don't need to have a bucket. Your profile can be particularly bespoke for yourself, and that's the scalability, and also it's going to be far more in tune with your desires and needs, and can fluctuate over time, where a traditional approach puts you in that bucket and you stay in that bucket until you get reviewed next year or the year after.
We use something, in our platform, you have your explicit preferences. You talk about what bonds you want to buy, what countries, but based on what you have on your portfolio, the machine calculates your implicit preferences. So that's a way of augmenting. So machine knows that this is what you say you are, but this is what we know you are, and what you are is a mix of those two. But what the machine doesn't know is your trading history before you went on to the machine, which a human being, a long-term RM, knows, right? So I think going back to that, back the banker and robo, getting them to work together, right, for the best outcome. I think that is the issue. But one other issue here with AI, etc., as we get into it in detail, and it's slightly technical but important, is biases. Our machine didn't learn stock patterns of the NASDAQ and the Dow, and then we tried to bring it to the Singapore exchange or the Indian exchanges where the patterns were different, right? So if you have to train a machine, what inputs it had, that needs to be very, very important, right? So there is technical work that I think we're in generation 1. I think we'll be a generation every year.
New frontiers. So this whole idea about geography, right?
Yeah.
And this is also not just about clients, but it's also about the legal concept, right? For example, many people still think they live on land. We live in the Republic of Singapore, right? Increasingly, with artificial intelligence and robot, many people live in the cloud, right? There's completely different proposition if you live in the cloud, right? And hence you tend to have a much wider opportunity set. Yeah, you have a much more global view. And also this idea of what is an asset class is expanded tremendously.
In the old days, which all of us belong to, we've seen the 5 crises from the Asian financial world. What was the aspiration for a banker? That as he grows, he covers bigger and bigger clients. And the bigger clients wanted the best bankers. So the whole thing was you got better brains. But today, if it's getting it on the platform, you see, hedge funds really make a lot of money because they invest a lot in in software. So the guy who's got the better algo, I think, in 5 years' time when we sit here, we'll be like the guys who make the heavy-duty algos versus the light versions of the algos. And we are talking one price point, there in the true advisory model, I think people will end up paying a lot for the outperforming algos, right? That's how I think you will start to differentiate. How much you do, you can get the release 100.1 rather than 97. So I think that's where it is. Today everyone gets the same, so it improves. But over time, let's see how it happens.
It wouldn't be just the algos for the return figures. It's going to be what service does this platform provide for you?
Yeah.
Because frankly, we've talked a lot about standalone robo-advising platforms, and that's really not where the model is going to go. The model is going to be, hey, I've got my advisory platform, I've also got other services, and whether it's insurance or whether it's basic checking account or whatever, credit card services, all of this stuff is going to be combined. So these silos that you're looking at now, no question, the return is going to be one of them. Everybody knows that the guy who gives you the best return is good. But if four of them were equal, you're going to say, well, which one of these breaks down more silos and fits into my life so that I can work with it